Welcome to Trading Club 7. I'm your lead educator, and I'm thrilled to have you on this journey to becoming a successful trader. Today's lesson is a crucial foundation for everything you'll learn in the future. Have you ever wondered why some people make money in the markets, while others seem to struggle with even the basics? The answer lies in understanding what trading actually is. I'm about to blow the lid off a concept that's often misunderstood, and by the end of this lesson, you'll finally have a clear grasp of the fundamentals. Trading is a form of speculation that involves buying and selling assets, such as stocks, currencies, or commodities, in an attempt to profit from price fluctuations. This might sound straightforward, but let me ask you, how many people have you seen buy an asset with the intention of selling it later, only to lose money or become confused about what to do next? Now, I know what you're thinking. Isn't this just like investing? Well, not exactly. Investing is essentially buying and holding onto an asset in hopes that its value will appreciate over time. Think of a farmer planting a seed and waiting for it to grow. He's investing in the long-term potential of that seed. Trading, on the other hand, is like a chef who buys eggs at the market and sells them at a higher price before the end of the day. The key difference is the mindset. One is a long-term hold, the other is a short-term buy and sell. To illustrate the difference, imagine you're at a grocery store, and you buy a bunch of carrots for 50 cents. If you're an investor, you might put the carrots in your vegetable crisper and let them last for weeks, hoping to sell them or use them later. But if you're a trader, you might buy the carrots and immediately sell them to someone else for 60 cents, making a quick profit. So, why does this matter? Well, if you're an investor, you're focused on the long term and are willing to ride out market fluctuations. As a trader, you're focused on making money from day-to-day price movements. The big mistake beginners make is trying to mix both strategies. For instance, you might initially invest in a stock with the intention of long-term appreciation, but then become tempted to trade it in hopes of making quick profits. This can lead to confusion, impulsive decisions, and ultimately, losses. A common mistake beginners make is getting caught up in the hype of making quick profits. They often underestimate the risks involved and fail to develop a solid trading strategy. For example, imagine someone buys a stock in hopes of making a 50 profit within a week. Before they know it, the stock plummets 30, and they're left worried, stressed, and questioning their decision. This can be avoided by understanding the risks involved in trading. It's essential to understand that there's no guaranteed profit in trading, and trading can, in fact, lose money. This is why it's crucial to practice on a demo chart or paper trading journal before risking any capital. You wouldn't learn to drive a car by immediately getting behind the wheel of a real car, right? You'd practice in a simulator or on an empty parking lot first. For your homework, I want you to create a simple trading plan using a demo chart. Choose a currency pair, such as EURUSD, or a stock like Apple, and create a hypothetical buy and sell scenario. Set a clear price target of 1.05 for EURUSD, or a specific price for the stock you're choosing, and establish a stop loss level of 1.03, or a specific price to protect your losses. Now, see how the trade plays out in the demo chart over the course of a day. Don't worry about making a profit or losing money just yet. Focus on understanding the process and developing your critical thinking skills. Remember, trading is a complex and challenging field that requires patience, discipline, and practice. By understanding the basics and learning to control your emotions, you'll be better equipped to make sound decisions as you progress in your trading journey. In summary, trading is a form of speculation that involves buying and selling assets in an attempt to profit from price fluctuations. It differs from investing in that it focuses on short-term price movements, rather than long-term appreciation. Remember, there's no guaranteed profit, and trading can lose money. To avoid common mistakes, It's essential to practice on a demo chart or paper trading journal before risking any capital. That's all for today's lesson. Thanks for joining me on this journey to becoming a successful trader. If you found this lesson helpful, be sure to like, comment, and subscribe for more educational content. In the next lesson, we'll be diving into the world of charts and technical analysis. Stay tuned, and we'll see you in the next video.